I'm Mark Sumner, host of the Channel Chat podcast show, and today I have Adrian Liddiard and John Schmidt, the CEOs, in fact co-CEOs of WeFi in the studio in London. How are we doing, gentlemen?
Very well.
Very well, and very nice to be in London.
Yeah, thank you for coming in. In fact, you've ruined my studio because both of you wanted to sit in the same hot seat because we wanted to sort of speak to you both, actually. Because
I could have sat on his lap, but you didn't say that.
No. But let's start there because it's very unusual to have co-CEOs. And normally I'm thinking, is one in charge or is one in charge? So tell me about this relationship. How did it start?
So it started in about 2004. I was in the reseller business at that point in time, and John was starting up his business called Castle Pines Capital. He came to visit me. We were struggling with channel finance. We had an incumbent that really wasn't helping us with our business. I said to him that if he could solve my challenges, he could win the business, and he came back a month later, presented a solution, and what started as a professional relationship turned into a great friendship. They started providing channel finance to the company I was working for at the time, and the rest is history.
Yeah, the best part of that story is Adrian always just said, we both sold our companies. I sold my company to Wells Fargo, and he sold his company to Presidio, and we were now not working, retired. But he always used to say to me, he said, one of these days, first I want to work with you. Second of all, I think your business is a lot easier than mine. I have to work so hard to get my clients and do the install and collect the receivables, and all you do is take a commission every time. Every time I do this, and now he's on my side, and he's finding it's not that easy.
So your background, John, you came from a finance background. Is that how you started?
Yeah, I got lucky right after out of college. I was in a channel finance company, but it wasn't called channel finance back then, and it wasn't technology. It was appliances. It was motorcycles. It was things like that. So that's how I started. And then in the 90s, early 90s is when I met Cisco, when I met H. Hewlett-Packard. And I was in the Bay Area, and the company they were focusing on everybody take a product. And I said, I'm taking tech. The velocity of this business, the excitement of this business, where it was going, it was fascinating. So I picked tech. So since probably the early 90s is when I focused strictly on tech. And that's what we do today.
And Adrian, you started in New York. I know you're from South Africa originally, but you started in New York a tech business.
Yes, I did, Mark. But going back to my history, I started in tech in 92 for a global tech company at the time. So I've been in tech all my life, mostly on the reseller side. So relocated to the US in 2001, worked for a global reseller. Then in 2005, end of 2005, 2006, with another business partner, started a company called Blue Water Communications Group in New York City. And we built that business and then sold it through private equity and ultimately became part of Presidio, which is a big global integrator today.
And at that time, was John's company providing the finance? Was that relationship already started?
Yes.
Yeah. We were. By that time, I had already sold Castle Pines Capital to Wells Fargo. So it was, but the relationship was still there. Yeah. So we've had this relationship since the early 2000s.
Yeah. So funny you should mention that because that's probably worth telling you that story. So we were starting Blue Water. We needed money.
Yeah.
And I reached out to Schmidt and said, we need a credit line. And he said, well, how much do you need? We said, well, we need $500,000. He said, send me your balance sheet. Sent him the balance sheet. And he said, there's nothing here.
Well, I still need the money.
I still need the money.
I said, that's not my problem. That's your problem.
Yeah, exactly. You're the money guy.
You're the money guy. Go figure it out.
Yeah.
And he did. And when I left, the credit line was, I think, was $125 million.
$125 million
Wow.
from $500,000. So it's a success story.
There'll be listeners listening to that story and thinking, oh, I could be interested in getting some finance. I've got nothing on my balance sheet. How do they approach, a venture capitalist or a PE company where they say, haven't really got anything, we have got nothing stable on our balance sheet, but we need finance, we need credit lines? What do they do?
Well, they're going to need finance somehow because vendors, if you start a reseller, vendors aren't going to give you terms. Right, and this is what we specialize in. I mean, we like some background, so it's not somebody who's not been in the reseller space before, some experience. They need to have some kind of money and some kind of business plan to going. But this is what we do for a living. So we provide facilities for resellers and distributors, and the credit capacity that we provide is far greater than a vendor would ever give. I mean, I've had examples where a vendor would only give maybe a $10 million credit line, and we've given almost $800 million. So there's just a different, it's not what they do, it's what we do. It's what we specialize in. They don't specialize in credit and collections. They specialize in their products, and that's where they should stay. And we specialize in providing capital to help those resellers grow.
So, Adrian, give the listeners a bit of a background. You started WeFi. For the listeners that don't know what that company does, what do you do?
We're a global fintech company, financial technology company, providing working capital solutions, and I can touch on some detail around that, to technology vendors and their channel community, which could comprise of both the distributors and resellers in over 40 countries around the globe. At the heart of what we do is our technology platform. It's an AI platform that provides all the workflow and the features and functions to provision those solutions around the globe in whichever language, whatever currency, whatever we need to do. From a working capital perspective, so what is working capital? That's the capital needed to run the business on a day-to-day basis. So think of receivables, think of payables, think of inventory. Those all need to be financed. Good way to look at this, I often like to explain, is if a company gets into the receivables business, so they're in the process of lending, providing credit, they're acting as a bank. They are a technology company, but they enter the world of a bank because they're lending. And that's where we come into play and provide that growth capital for the vendor and reseller community across the globe.
Who approaches you the most, John? Is it vendors approaching you for cash? Is it resellers approaching you for cash? Is it distribution? Who's actually coming to you?
The sales starts at the vendor level.
Right.
We finance distributors and resellers, so it starts with the vendor level. So we get with them, and we want to help them do several things. We want to take risk off their balance sheet. We want to reduce their DSO, give them money up front, and we want to service those receivables, which lowers costs, get them out of the banking industry. They are not banks. They are technology companies. So we go to them first. And once we set up a program with them, so maybe they provide 30-day terms on open account. Well, let's set up a program where we can provide 60 days through our program, double the terms, maybe even 90 days. Well, we have proven on multiple very large vendors, if you provide extra terms and capital, the reseller grows at 20% faster than that are just on that 30-day terms. We have statistics that have proven that. So we start there, and then they give us a list of their priority resellers, and then we go and meet those resellers and put these programs in place. And it's not an easy thing. We're providing a lot of capital. We've provided around $7 billion right now around the world.
$7 billion.
$7 billion around the world in 43 countries in multiple currencies. And what we've done is we get these resellers, and whatever their needs are, we try to figure out how to give them the facility and the terms necessary for them to grow, so that, and then take that off the vendor's pain point.
So if I want to start a reseller, I've got your numbers now. I can come direct to you. We can get some capital going. And get it going.
We'll take your call, Mark.
Absolutely. Is there any conflict between the two of you when the vendor comes up to you? Because Adrian, your background, business, finance, reseller. John's background, more the finance, looking at the balance sheet. Do you ever get a conflict where a customer comes to you and you think, this is not a good deal, this is a bad technology or bad product, and even if we give them finance, it's not going to work? Do you ever get conflict between you?
Yeah, do you want me to go?
Yes.
We're really disagreeing. Who's going to go first?
Go ahead, Adrian.
No, of course we don't agree on everything. There's a lot that we agree on, but there's stuff we don't agree on. I think that exists in any partnership. It's healthy. It's good for the partnership. But we discuss it and we debate it and we figure it out. In terms of the skill sets per se, John's got 35, 40 years of underwriting experience. I could never replace that. So I'll always lean on him as it pertains to that side of the house. I spend most of my time, because I understand the reseller communities so well and have been in that, a lot of time on the origination, the business development side. So that's sort of how it shakes out.
So we don't really divide the business. We're both involved, but we're both involved in sales. Really what we do as CEO, co-CEOs, because we have a very good management team. We have a president in the Americas. We have a president who handles Europe and APJ right now. So we're the CEO. So we really work on sales, innovation, and strategy. It's really where we have evolved to. And we spend a lot of time right now on innovation, and we certainly would love to touch on that.
WeFi operates in the US and in the UK. What's the main differences between those countries and how you operate?
Mark, from a solution perspective, each country is different from regulation, from compliance, data compliance, whatever the regulations are. There's know your client, from a compliance perspective. So there's those nuances, different currency, right? In the UK, you're going to be working with GDP if it's a local onshore solution. So those are the nuances, and every country is different, just has different nuances. Some are pretty straightforward, some are immensely complex. So you just don't know what you're going to get.
It's complex over here. The customers are great in both places, but in the States, we have 50 states, and the laws cross borders. Here, it doesn't cross borders. Again, the complexity, keeping up with the laws in the local country, whether we can even do business in those countries. And then of course, we need to put money out, and that's always, that's always a challenge from some of these difficult markets. Most of Europe, Western Europe's easy, and then you get some of the difficult markets we operate around the world.
I've noticed, or I've been told, WeFi have been growing quite rapidly. What's the driver behind that growth? How come you're growing so quickly?
Yeah, I think it's a great question. I think it goes back to why we started this business in the first place. If we look at the competitive landscape, there was a dearth of product and technology innovation. The incumbents in the market had been there for a long time doing the same thing over and over again. It was very static in terms of how they approached the market. We wanted to bring a different approach where we brought product innovation, where we could solve complex markets, challenges around the world. And that's what we went about doing. So we spend each and every day looking at different ways to innovate and bring those benefits to our clients. And that's really what's underpinned our growth. Giving you some detail, Schmidt touched on some complex markets. We were asked by a particular vendor to go and solve a difficult market like Turkey, right? And no offense to Turkey itself, it's a difficult market to go and solve in terms of what we do. It had never been solved in the way that we went about it. It was an onshore solution that needed to be done in both local Turkish lira as well as US dollar. And we went and solved that for a vendor. And that was a big deal. And after we solved that and put credit capacity into that market, we saw enormous growth on the back of what we did there. And that led to opportunities in other markets.
Sure.
What about for you, John? Why is it growing so rapidly?
Well, we have a good team. We've deployed where we're getting traction is we're hiring salespeople, not from the finance industry, but from the tech industry. There are exceptions in that. But, I call them animals sometimes. I mean, they live and die every day by that next order, right? Finance companies and banks don't do that. So you blend that, and now you get a different type of a salesperson. So, and then they have current relationships. But I would tell you our innovation has helped us a lot with customer experience. We transact every 5 seconds, 24/7 around the world in different currencies, and so wow. the system, it's much friendlier, and so people are finding that we're pinch points like dispute management. It's not very sexy out there, but there's disputes between vendors and resellers. We're now in between that relationship, and we help them solve those transactions. And that's what we do. Every day we look for how can we help the reseller base, how can we help the vendor base, and that's what we've been doing.
Now, WeFi works closely with vendors, distributors, partners. You've already mentioned that. What does a great channel partner look for you? Who are you looking for to attract?
We look for any client that needs help with their working capital, they need growth capital. Any client that's got the balance sheet to support it, obviously.
You didn't have a balance sheet, Adrian, when you went to John. Come on. You had nothing on there, and you still got 500 grand.
Yeah.
Exactly.
Absolutely. No, I mean, there are obviously exceptions to that rule, but you're talking about the perfect scenario here, right?
Yeah.
Perfect scenario from a vendor perspective is someone who has a global go-to-market.
Yeah.
I've got resellers in all the markets that we participate in, 40 markets around the world. That's ideal vendor for us, and is looking to grow that partner network. And we play a big role in providing that growth capital to keep that market from growing.
So all your sponsors and things, they make these sales and they work really hard and trying to make that sale. But the last thing they want to do is when they finally get that order is to have an issue with the vendor getting the product because you have credit constraints. A perfect scenario for us is to provide the capital, so when they get the order, no problem. It doesn't matter, small, big, if it's a $10,000 order or it's a $100 million order, we want to be able to provide the facility so there's no stress in the worry. They have it. They don't have to worry about this piece of the business.
Is there any companies that come to you and just think, I just need the money, I don't need you advice from what you're doing, I don't need this solution, I don't want your AI, whatever it is. They just think, John, can you just get your checkbook out and help us with some finance? Do they understand what they're actually getting into when they sort of speak to a company like yours?
Yes. Absolutely.
They do?
Yeah, but maybe we should take a step back here and just talk about the capital structure.
Right.
In terms of a business, right? So there's a couple components to the capital structure. One is the equity that the owners would put in, or any other investors putting in. That's the equity sits in the business. There's debt that can be added to that capital structure, and then what we do is we provide the working capital, right, which is another form of financing as part of that capital structure.
Yeah, I would say, again, we are replacing the credit and collections for the vendors. So in simple terms, so a vendor, you can pick any of your vendors, they sell on net 30-day terms, and we're just replacing them. So instead of them getting paid in 30 days, we'll pay a vendor in 3 days. It's off their books. Now it's on our books, and we do the servicing of that. We take the risk off their books, and we provide more capital than the vendor did. So they know what they're getting into. And in most cases, our vendors pay for the program. So it's interest-free loan, interest-free money to the resellers and distributors. So they love it.
Bet they do, John. It sounds great. You've convinced me. It sounds absolutely great.
It's too good to be true.
It's too good to be true.
But they pay for it for one reason. Vendors pay for one reason. They need these partners to grow.
Yeah.
Our fee is, I would say our fee is low. But for just, if they grow just a couple percent, they pay our fee. So, but we expect our partners to grow at 20% more than they would if they were on open account.
And John, on that point, everyone wants to grow at 20%. If they could do that, they'll be flying. What do you think is the biggest challenge the channel companies are facing in 2026? Where are they struggling at the moment, in your opinion?
Yeah, well, it depends on what their go-to-market is from a product perspective, right? If you got resellers that are focused in the AI space today or in cybersecurity, they're flying. Mark, every aspect within technology is pretty cyclical. Some of it's not, but it's totally dependent where they're playing. In terms of their go-to-market. All right, so I'll start there, and then from a credit perspective, they all need credit capacity. Every single one of them needs that growth capital to keep growing. And it's an inhibitor to growth. So if they aren't able to get that liquidity in their channel, then it's a real struggle for them to grow. And if I could simplify that, you're buying a good or a service from somebody, you're then on-selling that to somebody else. And if that buyer is paying you much later than when you repaying the technology vendor that's providing that good, then you're going to have a cash shortfall, right? And the more you grow, the bigger that shortfall becomes. So that's what we try and fix is to provide that liquidity for those partners to grow.
Yeah, because there's going to be partners out there that are trying to get credit lines from distribution, and they can't get credit lines from distribution. So what do? Do they suddenly try and involve WeFi, or do they go past the distributor and say they have to go past them?
Well, they know they could call us.
Right.
We could get the name from the distributor, and
right.
we hope to do that. But if they could just call us directly, we certainly will set up the program and then go to the distributor and say we have the credit capacity. You think how big this industry's got. I've been doing it since the 90s. And a $500,000 credit line was a big credit line back then, okay? But now we're dealing in billion-dollar credit lines. There's these 500s, there's out there, but with the number. If you look at all the distributors, these distributors, if you add their revenue up all together, there's not many of them anymore, right?
Yeah.
Used to be a lot more. Add their revenue, and we do this exercise. Add 10%. You're talking about requirement of capital in the billions. It's crazy. The numbers are astronomical too. And then there's been a huge consolidation with private equity. They have bought. A reseller today does not look like a reseller 10 years ago.
No.
It's been bought. They've been consolidated. So if they grow 10%, it's billions of dollars. So it has to come from somewhere. And and now we're seeing all these large AI orders coming through, massive ones. I mean, and they'll show up at your door at $300 million, and they need it done in 2 days from now.
Yeah.
And these are the problems that we try to solve for them, and we just want to make sure it's the capital's there when they need it.
You talked about AI there, John, and I'm going to have to ask you, in your organisation, what are you doing around AI adoption? Are you actually, adopting AI internally, and are your customers asking for it as well?
We love that you asked that question.
Go on, John, you've got to answer it then.
No, it's live for us. We have 20 agents working for us today.
Really?
It's real. We have 20 agents that are in the system. They're operating today. We created a platform called AgentFlow. AgentFlow creates agents. So we find the use cases from internally, and we develop agents. We're improving workflows today that we have today, but we are early adopters. We started an innovation center in South Africa about 3 years ago, and these are incredibly talented people that understand this market, and they've been able to take. We were investing in AI years ago before it became a hot topic, and and I'll have Adi answer what happened. What's good for the customers? It's great for us, right? Because we're becoming more efficient, but it has an end result for our customers too. But we are completely on board with the development. We're making big investments in this area.
Mark, if you look historically, a platform's been mostly a workflow engine. That's for most part what it's done in our industry. But we believe in the next 3 to 5 years, it's going to be completely different. There's going to be external, internal AI agents created, more integration. It's going to be easier to solve complex challenges. It's going to simplify the workflow. I think it's going to have a great impact on the cost of the service. So there's a boatload of benefits that are going to transpire.
Yeah, and let's give a couple of predictions on that. So you've mentioned there sort of 3 years out. Where do you say sort of 3 years it's going to make the most impact? And maybe in your business and in your sort of channel partners you're dealing with, where do you think AI is going to make the most impact?
Yes, so let's start in the short term, if I may. Short term, mostly productivity and scale. We like to call that first generational benefits. So those are happening now. I think followed very closely behind that. Now we get to maybe more of your 3-year timetable, but more integration between what we do and our clients, be it a vendor client or a reseller client. John touched on dispute management. Integration where agents that reside on our platform are integrated with agents that reside at a vendor, and the agents are resolving the dispute before a human touches it. So that'll improve the amount of disputes that are happening. It'll improve the time to resolution, and that's just one simple use case. I think beyond that, you start looking at digital assets, digital payments. I don't think that's far behind. So it's a complete new world in terms of how transactions are going to happen around the globe. Smart contracts, smart orders, analyzing data that can drive better business outcomes. So that's where we see in the next 3 to 5 years. Did I miss anything?
You did it. It's going to be a very uncomfortable 3 years. It's going to be, for executives, it's going to be a very uncomfortable because we need to open our minds. Gone is the day where I say, well, this is how we did it. We don't say that anymore. This is how we try to stretch our minds as much as possible. And listen, our innovation center, they don't come up with the ideas. They do the technology part of it. But our managers need to come. We ask customers, where are the pinch points? Where can we help you? And then you need to dream big.
Can we touch on the external side?
You can touch whatever you think you want, Adrian.
Because Mark, I think you might find this very interesting, right? Schmidt mentioned the AI side and what we're seeing. I mean, the scope and size of these orders are unlike anything we've ever seen in our lives. $10, $20, $30 million used to be a big order. Now you get a one-time order that's $300 million.
It's crazy.
It's crazy, right? It's hard to get your mind around this, and we need it tomorrow, right? And it's just one day, after the next. Right now, a lot of this business is being done by the large language model builders, right? The hyperscalers are big spenders. The neo cloud providers are big spenders. Now, if you look at that group, you know who has money and who doesn't. So there's a whole bunch of growth capital that needs to come into this market to support what's happening, right? You've seen some of the technology vendors and what they've done to provide that growth capital to some of those buyers that don't have the balance sheet to support the kind of investments that they're making. So what you're seeing now, we think, is a window to what you're going to see on the distributor and reseller side as you see enterprise and sovereign AI markets start to ramp up, because the scale of it is enormous. You're going to need credit capacity, you're going to need growth capital, and that's where we believe we can provide enormous value to this industry.
We're going to go to an unprecedented revenue cycle here in the next couple of years. Unprecedented revenue cycle.
John, you mentioned there that if they have the finance operations, they can grow faster, they can grow 20% more.
Yes.
Where's the data backing up? How can we demonstrate to channel partners out there thinking, yeah, it'd be great to get finance options, or it'd be great to get these facilities from vendors, but is it going to help me grow?
This is one of the reasons we can sign up a vendor, because they set us up and then they prove to themselves, because remember, the vendors are paying the cost. Yeah. And then always Treasury says, well, why are you paying for this? Well, this is why we're paying for it, because this group of reseller grows. Well, if that's true, put more on it. So, is it out there? No, but we know that statistic because we are judged every day by our vendors to make sure that we are helping them grow their portfolio, or their spend. Because otherwise, why would you do it? You're throwing money away. So we just know, and we've had two major vendors make that analysis and say this is the statistics that we get. Now we don't typically go to a new vendor and say they did the analysis. We don't want to share that data, but we ask that we get judged once we start the program with a new vendor.
So if there's any vendors out there listening, obviously there's 18,000 people out there. If they want to have a conversation with you, they can just they can't DM you, Adrian. You're not even on LinkedIn. You've got like 200 followers. No one's calling you. They're gonna have to send it to John. He'll have to do the pitch on
Absolutely.
that. But you're happy to engage with new vendors and approach them and see how you can help them with their facilities.
All day, every day. Would love to be engaged. Love to talk to them about what they're trying to do.
Great.
We can try it in a market. We've proved it in market after market after market. If you can bring capacity into that market, you can drive business. Just look what's happening in the AI market today. Do you think more AI business would be transacted today if those credit lines were bigger from some of those buyers? Of course it would be.
My last question, gentlemen, and I don't want you to sit on the fence, and I don't want you to say WeFi technologies.
We're going to commit.
I really want you to give an honest answer here. In 2026, I'm going to come to you first, John. In 2026, it could be a vendor, it could be a partner, it could be a distributor. Who is the one to watch? Who do you think in 2026 is going to do well? Could be one of your customers, but who's going to do well?
Obviously, NVIDIA is up there.
NVIDIA.
They are the powerhouse today, and their revenue drives working capital issues right down to the bottom of the channel. It pushes issues into distributors, it pushes issues into the resellers. So I think they are going to be the biggest winner here, but them being a winner, everybody's going to need help to get going. And all the distributors they're doing a great job. This last year was this is going to close up to be a nice year. We've had some struggles over the last several years with growth. This year's a nice growth year. I think next year's even going to be bigger.
Absolutely. Right, Adrian, close the show. Who's going to be the one to watch in 2026?
Oh, Mark, you're going to put me on the spot, and I'm going to give you. I don't know if I can give you a name per se.
You can't sit on the fence, Adrian. You've got to give us. Could be one of your customers. Who do you think in the market's going to do well? There's got to be one company you think, do you know what? From afar, they're going to do well.
Look, it's hard to look beyond NVIDIA right now.
You're copying John.
I know.
I wish I'd asked you first now. John would have given me a real answer.
It drives it into the other vendors. It does. But NVIDIA is the powerhouse today. And will that change anytime? I mean, it's mind-boggling, their backlog. It's mind-boggling, their technology. I love every bit about this. I've been doing this for so many years. My 41st year. And people ask me, why haven't you retired? You sold a company. You know why? I want to see this through. I want to see this next cycle go through. And this is probably the most exciting time in the technology space that we will ever experience in our lifetime. And this is why I want to see it through.
Well, we've had 2 CEOs agree. It's going to be NVIDIA. That's what we're going to leave with. Guys, you've been a great guest. Thanks so much for your time.
Thank you very much.
Thanks, Mark.